Most of us are familiar with auto, home, life, health, and property insurance, and most of us have at least one of these protection plans in place. However, far too many of us fail to insure the one thing that provides for everything else. I'm going to assume that everyone on today's call is the owner of a cell phone. When that device is sold to us, we have the option to insure it. Most of us decline this option. We do this because although paying more than $700 for a replacement device is not something that we find enjoyable, we do see the device as being something that can be replaced. The question is, can we afford to replace a paycheck? I want to keep this call informative and on a positive note, so I will avoid statistics as much as possible. I will share with you that illness, not accidents, are what account for most of the disabilities that keep us out of work. And it's not just our own illness, but think of an illness that is affecting our spouse, our children, or our parents. If we are tasked with caring for them and unable to work for some time, wouldn't a weekly or monthly disability check be well received? Let's deconstruct the assumption that the only thing that can disable us is an accident. I'd like to share with you examples of how expenses increase when we are disabled. Let's think about the cost of rehabilitation or the cost of modifying your home to accommodate medical equipment. The bills are not put on hold just because you cannot work. Consider the cost of missed mortgage payments and of late fees when bills are not paid on time. Disabilities have historically caused nearly half of all mortgage foreclosures and a significant number of personal bankruptcies. There are many situations that can take us away from work and thus away from a paycheck. So the first slide that's up right now has to do with understanding disability and what are some of the things that can make us disabled. Some of these are carrier specific, but they're things that we want to really focus on. We have medical reasons. We always hear, well, if you have cancer, if you have some life-threatening illness, that is what is a disabler. But that's not just it. There could be injuries, and I've actually documented poisoning. And when I was doing that, I thought, boy, everyone on the call is going to think that some of us are just out there trying to poison ourselves. But that's not the case. We go into office buildings to work, and we're exposed perhaps to lead in the paint or asbestos in the building. There are different things that could poison our bodies, and our physician would be the one to document that our illness is due to something like that. But injuries, a lot of us do things that we should be doing to try to keep ourselves healthy. Me, I like to go to the gym, but I was telling Renee yesterday that last week I pulled a muscle, and I haven't healed. That's very painful. If that was my back, that could be a big disabler. Let's move on to mental stress and anxiety-related disabilities. Stress is something that all of us can relate to. And if we need to take time off of work to really help ourselves and mend whatever is creating stress for us, then that is something that could be seen as a disabler and a benefit could be paid. What about substance abuse? Carriers are not going to discriminate and deny you because you might have an issue with substance, but if you need to take time off to make yourself better, then that could be a disabler that could qualify for a benefit. Connective tissue issues is more common. This is where we have back issues, knee issues, hip, muscle issues, like I said, my arm right now. But that could be, depending on the severity of it, a disabler that keeps you away from work and thus from earning your paycheck. One carrier-specific benefit that I found very important to us, especially as women, the fact that we are nurturers and we are the caretakers, is a compassionate care benefit. Think about if we have a family member, a child, a stepchild, an adopted child, or a domestic partner's children, our spouse. If they are ill and we need to care for them, as many of us would and have done, and we can't be at work, we could qualify for a benefit. Again, that's carrier specific. But moving on, let's look at our protection options and what they provide. Okay. Many of you have heard of workers' compensation. However, keep in mind that most disabilities are not work-related, thus not eligible. California happens to be one of the few states that offers short-term disability benefits for up to 6 months. Please keep in mind that some disabilities last much longer than 6 months. Social Security administered by the federal government covers most workers, but qualifying for benefits is very difficult. To qualify, your disability must be expected to last at least 12 months or end in death, in addition to other requirements. About 65% of Social Security disability applications are denied, and even when they're approved, the benefits are fairly modest. The average monthly benefit is barely above the poverty line. Group benefit plans, or employer-paid plans, are the main source of income protection, and this makes qualifying easier. I would encourage everyone on this call to check with their employer's Human Resources Department or Benefits Manager to see what coverage and purchase options you have. The downside to these plans is that you may not be able to keep your coverage once you stop working for that employer. Many people are surprised to find that they owe taxes on disability benefits received from employer plans. Remember this, if your employer pays disability benefits for you or deducts premium from your payroll pre-tax to pay for the plan, the benefit is almost always taxable. Individual plans offer the most flexibility. This is where you can keep coverage even if you change jobs. Most plans will pay between 50 to 70% of your pre-disability gross salary. And since you pay for these with post-tax dollars, the benefits are income tax-free. Moving on, what do we look for in a disability benefit plan? Look for a benefit level and period. You may recall me mentioning that disability plans offer between 50 to 70% of your pre-disability earnings at the time of plan purchase. Some of these benefits are limited to anywhere between 1 to 5 years, some until age 65. There may even be some that offer benefits for life. We also want to look at an elimination period. These are waiting periods before benefits kick in, typically 30, 90 days, or 6 months. This means that you are self-funding your expenses during this elimination period. And we often hear that we should have at least 3 to 6 months of reserve pay saved up for an emergency fund. That's another reason why we would want to have that. Remember that the longer the waiting period before benefits kick in, the lower the premium you're going to pay. We also want to look at the definition of a disability. Some plans pay if you're unable to perform duties of your own occupation. That's what you do every single day, whether that's typing, hairdresser, your own occupation. And others pay only if you can't work at any occupation for which you're reasonably qualified. So let's just go with an extreme example. You have a brain surgeon, and that individual's occupation involves he or her working with their hands and performing surgery on a brain. It's very important if he or she's going to be qualifying for benefits that plan says that if they can't perform their own occupation. But see, some plans will say any occupation, and will tell that particular individual, that doctor, well, sorry that you can't do surgery, but maybe you can teach. Maybe you can do something else and still qualify for a benefit. That might not be what that individual wants to do, but some plans might limit. Some plans only pay for disabilities arising from an accident. Some plans pay only if you are totally disabled, and others may cover partial disability for a limited time. There's such a thing as a residual benefit, where you can receive partial disability benefits if you are unable to perform some aspects of your job, thus not earning 100% of what you earned before you became disabled. You also want to look for a guaranteed, renewable, and non-cancelable contract. This guarantees that your policy and the terms cannot be changed or canceled as long as you pay your premium. So inflation protection, This is where cost of living continues to increase, and what the benefit amount is today needs to keep up with that cost of living. So an inflation protection would make it so that if you did become disabled 5, 10 years from now, the benefit has grown to keep up with inflation so that that future dollar still covers what today's dollar would. And you want to look at pre-existing conditions. A perfect example of this is pregnancy. Almost all plans will exclude pregnancy unless you have the plan in place for a period of time before becoming pregnant. And I've seen that a lot where an individual, a woman obviously, would switch jobs and has only been employed for 1 month or 2 months and is either goes into that employment and is pregnant already, in which case it would be excluded, or maybe 1 or 2 months into the plan becomes pregnant and the plan would exclude it. So we want to make sure that we understand what the terms are there and what is excluded. Moving on, I'd like to deconstruct some of the myths, and I'll pull some statistics now in order to show this. First myth is, it won't happen to me. Let me tell you that the number of disabled workers has actually risen by 25% since the year 2000. The next myth is that the disability insurance is too expensive. The average annual premium is actually 1 to 3% of your salary. Let's think about that. Please think about that. 1 to 3% of your annual salary is what you are paying into a plan that is going to reimburse you weekly or monthly for a specific time frame. The next myth is that government programs will take care of me. Social Security, disability insurance, or workers' compensations are benefits that you may not be eligible for. Number 4 is, I can always get coverage later. You don't usually get healthier as you grow older, and coverage will cost a lot more as you age. And the last myth is, I can rely on my savings. Even if you save 10% of your salary, a 1-year disability could eliminate many years of savings. Please take the time to consider the obligation that your income pays for. Can you afford to live without your income? And I'll close with this quote, which will come up on the next slide. You don't need disability income protection if you don't need your income. With that, I will put out there that many of you may not have reviewed your current plans to look for any gaps in your coverage, whether those are employer or personal plans. I'd like to turn this back to Renee, so she has a tool that will be made available to all of you to help you identify some of the gaps you may have. Thank you for your time.
Great. Thanks, Erika. Just short, succinct. That's just the way we like it. It gives us opportunity to get a lot of information in a short period of time. And these are all very critical things. Some things that kind of floated up with me, and I would invite any of you who have any questions to please use the chat box and share your questions. Some things that kind of came up while we were talking, though, I had some questions about. You know, in some parts of the industry, insurance industry or risk protection, women may have to pay more in premiums than men. Is that the case? That certainly has been the case with long-term care as an example. Is that the same case with disability?
Renee, you're asking me? Because that is the case with disability. Women will pay higher premiums.
Wow, we can't get a break, huh?
We can't.
Okay. We have a couple of questions from the audience. Can you speak a little bit about some individual plans for those who are self-employed or freelancers? And we do have some individuals on the call who are, you know, have some interest in that. I just had a conversation with a young woman earlier today who's self-employed and, you know, just trying to figure out what are the resources that are available there.
Absolutely. The carriers in this case will look at W-2 earnings. That's usually what they do. That's how they base your salary. If you were, let's say not a freelance, but let's say you had, you know, a base salary with commission, they'd maybe have a look-back period of the last 12 months of commissions and take an average to determine what your salary would be. But being specific to your question here, they'd look at a W-2 and then base the benefit that 50 to 70% would be based off of that amount. And if the following year and the years after that, God willing, you are making a lot more, then you would just report that to the carrier and let them know, look, I'm now not only making 100,000, now I'm making 300,000, 400,000, because remember, you want a replacement of what you are earning currently. And so if there's no penalty for telling the carrier that you're making a lot more, obviously your rates are going to be tied to a higher reimbursement amount. But again, you're still averaging about 1 to 3% of your salary as far as a premium goes.
Okay. Also, a similar question about women and the differences in the premium. Why do women pay higher premiums in this disability space? I understand the long-term care, but
yes.
Why disability?
Well, with long-term care, it's because, there's 80% of us are going to outlive our male counterparts, colleagues, whatever you want to call your partner, but that's what's going to happen, and we're going to outlive them by a long shot. So there's going to be a higher claim amount. With disability insurance, it's the same thing. Women tend to really take care of themselves, which means that they're going to take time away from an employment to do so. Women are caretakers. So yes, if our children, if our loved ones are ill, we are going to be the ones that usually have to not go take time away from work to go care for them. And pardon me if this sounds very sexist or stereotypical, but the expectation is that at some point we are going to have children. And so, looking aside from the pre-existing condition, let's say I've been working for an employer now for 9 months. And the pre-existing condition says, well, as long as you've been working at least 3 months, then you can become pregnant. So I'll tell you, it's also age-banded. So I can tell you that in the 30s, where it's our child-rearing years, you'd probably see a higher premium than you would in your 40s and 50s.
Okay. All right. Another question is a hospital income policy an option, and how does that differ from a regular disability policy?
I'm not familiar with the hospital income policy, and that's something that I could circle back on.
Okay. I think in this case, it's those kind that pay only when you're in the hospital, essentially. So if I understand that question, there are some that will provide you with a replacement of income, but you basically have to be hospitalized. So to the individual who posed that question, I would say that with the disability policy, it will cover, notwithstanding any pre-existing conditions, but you don't necessarily have to be hospitalized in order to claim, put in a claim and receive income from your disability policy, whereas I believe with the hospital-type policies, you have to meet that specific requirement, and some of those only pay for as long as you're in the hospital.
And there are some plans that if you are hospitalized, there's no elimination period. They will start paying a disability benefit day one. That's something to also take into account as you're looking at what options are out there or what options you'd want in a plan. There are also, where let's say that you work as a surgeon and you can't do that, but you're able to take another job somewhere else doing something else and thus collecting some income there. In that situation, some carriers would not consider that additional income you're collecting as an offset. They would still pay you the benefit they agreed to, 50 to 60 or 70% of what your salary was, which you're collecting on top of this temporary job you're also getting paid on.
Okay, that's a good point, because there was also another question about, when you have your own occupation versus any occupation. If I'm a brain surgeon and I can't do that surgery anymore, but I have an any occupation policy, and I'm used to making $500,000 a year, and they're telling me, well, you can still work, you can teach, and I can only make $80,000 a year. But if I have a policy that says it's going to pay me a certain amount, how does that work out? Because it seems to be kind of inequitable.
Right. So with more specific occupations, and everything really is tied to an occupation. So something really specific like a surgeon, you would not have a carrier that says, well, you can go flip burgers for a living. There's just really no correlation between the two. It would really have to be something similar, so you're teaching at a medical university or something in line with that. But there are other plans that would say, well, if you can't actually do what you've been doing, which is using your hands to perform surgery, then we're going to continue to pay you. But then there are also plans, for example, let's not use the surgeon example. Let's say that I am a full-time executive assistant and I have very bad back pain and stress and you name it, and I cannot work there. That means I'm disabled. They're going to pay me a benefit. They're going to replace a portion of my salary based on what the contract says. However, I'm now able to go do part-time tutoring at my kids' school. They're not related at all, and it doesn't matter, but I'm collecting, $100 a week or something there. Some insurance policies would say, well, 50% of your salary, which is what we're contractually obligated to pay, would have been, let's just say, $3,000 a month. But since you're collecting $100 a week, we're going to deduct $400 from what we're paying you, because that way you're not getting more than you were supposed to. Whereas some plans would say, we're still going to pay you your, and what I said, the example, $3,000 a month. We're going to pay you that benefit, and it doesn't matter if you're out there tutoring and doing other things, collecting other income. We will not offset.
Okay. So I'm guessing those policies cost more. Those premiums are generally going to be higher on own occupation versus any occupation.
Yes, the fluctuation being between, the 1% and that 3%, which is still a pretty low number. I like to call it pennies on the dollar because it's such a small amount when you think about a monthly or weekly benefit that will get paid to you for years possibly.
Okay, that makes sense. All right. Well, we are at the 30-minute mark. If anyone has any other questions, please feel free to drop them into the chat box. As Erika indicated, we do have a tool that we're going to be sending out to everyone so that you can take and evaluate what your plan is or lack of one. And that way you'll be able to really get a sense of how would you be covered should something occur? So one of the things that you'll see, and you all will get this, is a disability income protection checkup sheet. We'll email that out to everyone today once you do get at the conclusion of today's program and later this afternoon, And so with that, there will be links to a couple of sites. One is, what is your PDQ, your personal disability quotient? I took it yesterday. Thankfully, I have disability insurance because the numbers were quite astonishing, and having that loss of income would be devastating to my retirement plans and all of the things that I've built up so far. So it's critically important. So when you do get this form, and it's 5 questions, we keep it simple. We also including the links to this site as well as to another site from Life Happens, which is a great site, covers all types of insurance. It's not sales-oriented. It's a nonprofit organization that is there to teach and educate the consumer about the different types of insurances, everything from disability to life to long-term care, et cetera. There's also going to be a quiz on there. So you're going to have 3 different options and ways to evaluate your disability plan. But we ask you to take this short quiz and send us back the results. So we actually have the email address for you to email it back to us. We'll score it, we'll send it back to you, and it may require that we need to have a conversation to make sure that your income is protected. And if there's any holes in there, we want to make sure, like I said, you don't end up in the trenches. We want to make sure you stay on the road of life. So with that, I want to thank everyone for their time today. Hopefully we'll hear and or see you next month for our final webinar for the year, which is how to look like $1 million without breaking the bank. All right. Thanks, Erika. That was fantastic. Everybody have a great month. Bye-bye.